Anyone involved in investing over the last couple of years has heard of AI and how it will require unprecedented levels of energy. Data centers running 24 hours a day, the strain on energy infrastructure is a very interesting part of the economy right now. And guys, I think I have found it. Hello, Sage Seeds. Welcome to another deep dive value validate video. I have found Gulfport Energy, headquartered in Oklahoma City, Oklahoma. I think it's the energy play that I have been looking for. The type of play that might diversify our portfolio at Sage Seeds Capital away from the financial sector, which we have been deeply embedded in pretty much all 2025. But at Sage Seeds Capital, and thanks to our proprietary Sage Seeds AI, we have been starting to buy up some energy companies. At the top of that pack is Gulfport Energy. And in this video, I'm going to explain what we're seeing and why this company specifically should be at the tippy top of any of your value investment lists. Now, if you are new to the channel, I am a hardcore value investor, but I do take a modern approach to valuation. For example, growth and value are not separate things. They very often come together. But interestingly enough, jumping right into their latest investor presentation, the latest presentation that came out literally this month, I can find just on page 4, very early on, that this is not really a growth story. This is not really a compounder story. Unlike some of these other companies we've been covering since the summer, some of these financial companies that are just having an infinite potential for growth and compounding, Gulfport is not like that. Gulfport is a lot more on the Grahamian old school value investing side of things. This company has a high quality asset base that it's already happy with, and it doesn't need to grow its assets. That is not one of the goals. It's focusing on shareholder value and responsible stewardship. By stewarding the asset base that it has already acquired, this business is talking about rewarding existing shareholders through low costs and predictable future cash flow. Backing up to page 3, the Gulfport Energy overview. Gulfport is not one of these huge energy companies. It's big enough to be a big energy company, but still contained enough to be hyper obsessing about its efficiency. All of its acreage, where it actually pulls from the ground up the product it eventually refines and sells, is in Oklahoma or Ohio. Various key highlights. I encourage you to pause the video and check these out if you are a nerd like me. But this company is so organized, it actually knows that it has about 15 years of net inventory at similar to right now or slightly better over time rates of return. And as we dig deeper into this high quality asset base that Gulfport is stewarding, well guys, we are talking about natural gas. The key takeaway as investors is that the company's estimating a break-even price slightly below $2.50 per million thermal units. They describe this here in the header as a low break-even cost for their inventory, which has two important benefits. Gulfport is one of the few companies on the planet that the Sage Seeds AI has been able to identify with such a low break-even cost for natural gas. First benefit is it's easier to increase your net inventory opportunistically if your existing asset base has a very low break even. In order to expand, you might worry about the expansion affecting your break-even cost. That's the natural way to filter opportunities for expansion. Gulfport today is able to consider more expansion opportunities than the majority of its competitors. It can be less picky. Now, the second benefit of a low break-even is that you begin to generate cash more quickly in the life cycle of a project. That's where I bring your attention to this chart here, this beautiful bar chart. In the dark blue, we have net inventory levels at the end of every fiscal year. In the light blues, we see raw additions to inventory acquired during that year. The overall takeaway of this is that while it's not a straight line, overall, the number of additions happening each year are increasing. That's because existing projects that Gulfport have are generating cash more quickly than the average competitor, allowing Gulfport to more quickly increase the rate at which it adds to its inventory with cash flow. The faster Gulfport receives money, the faster they can begin using that money in profitable ways. So these two benefits, Gulfport can be less picky about its expansions, and it has more money to use on those expansions.
This video is intended for educational purposes. Opinions made by me or the Sexiest AI are not investment advice.
Inside the energy industry, this is the closest we are going to get to raw compounding at the economic level. So now we need to dig in what the money that's already being generated is doing and breaking down their budgets. I'm going to focus on this top left quadrant right here under capital program. We have just under 400 million being budgeted towards base capital expenditures. That includes everything that is needed in order for production to be producing. We then have another 65 million in these next two bullet points, and which represents about 15% of the base capital expenditures that go towards what are called discretionary projects and activities. Now, in a second, I'll show you how this 2025 development program looks like in order to really solidify that this can pay off quite well. No pun intended by me saying the word well over and over again. But finally, there is up to 100 million reserved for targeted acreage acquisition. Now, this is where we actually might see Gulfport open up a whole new plot of land, send employees to a brand new area if it can find new plots of land that it likes. And so it could be the case that this 100 million goes right back into the piggy bank, or that they reset the budget for a acquisition sometime early next year. Just because it's a little interesting, this 2025 development plan overview hopefully shows that they're building new wells in their existing territory. These circles represent the locations of all the wells that they've named around in the margins, and this big green plot of land, in the legend they call it the Gulfport Core Acreage Area. And when breaking it into a table, all of the statistics about their different wells in operation on this acreage before the development plan, and then on the right and highlighted in green were the updates to their statistics after the development. Remember, they spend a couple tens of millions of dollars on these development plans. Sometimes they pay off, sometimes they don't. But in the latest year, 2025, they did, for example, double the well count in Marcellus from 4 gross wells to 8 gross. They also added 2 wells in Utica Drygrass. These are early stage wells. But they added another 3 wells under the drilled category and actually 6 wells in the completed category. That's the big happy surprise. Now, each well helps. Each well does lead to incremental profit. But having this many completed wells in just a year was a very nice surprise for sure. These additional dry gas wells should be accelerating the return on equity as early as next year. That will be very nice to see, and is exactly the sort of thing that the average Wall Street analyst might not notice until after it's already been published in the return on equity. Now, at this point, we've talked about maybe 500 million in budget every single year, but where it gets very, very interesting, and the reason I'm so excited about Gulfport Energy, is that over the last 2 years, annual adjusted free cash flow has been in the hundreds of millions. Now, that is cash flow after all the expenses we just talked about. From that free cash flow, every year, Gulfport has established a precedent of doing stock buybacks. Equity repurchases executed is what they name it here. As far back as full year 2023, they did $150 million of that. They then increased that to over 200 million in 2024. Right now, they're on track to raise that to about 325 million in 2025. And what you can see is that that number is increasing quickly. 2025 is more than double the number of share repurchases that it had in 2023. And based on expectations and estimates, the company is going to continue ramping these share repurchases up very, very quickly. Out of a total of 1.5 billion authorized share repurchases, we still have just under half of that left. By our Sexiest AI's calculations, this already authorized share repurchase program represents about 20 to 25% of the company's entire market cap. Again, this is just with the cash that they already have. Nothing to do with what happens to this equity repurchase program over time as Gulfport's existing acreage is now hitting its economies of scale. They're estimating 15 years, hoping to expand that over time. But as stewards, we're looking at least a decade or more of free cash flow generation, with a management team that has started very generously returning that free cash flow directly into shareholders' pockets. Now, this presentation was made this month. I mentioned that at the beginning, but when they sampled it, the market cap of everything was only $3.5 billion. Given that Gulfport has already authorized $1.5 billion in share repurchases, with all those billions and billions of dollars being generated over the next 10-15 years, I actually don't care if Gulfport finds opportunities to expand or not. Now, of course, it would be great for them to find profitable projects. As a shareholder, I wouldn't be upset, but I'm here working out how there's very few ways in which Gulfport isn't able to generate $3.5 billion over the next 15 years, meaning that this company is going to be able to completely buy itself back just with the free cash flow that it has without having to basically lift a finger. Every day that this company and this management team improve things is just additional profit from an investment standpoint. I basically can buy shares in Gulfport Energy today, guaranteed that I'm going to get my money back with zero risk involved. Now, to figure out how this could be the case, I'm looking at this Simply Wall Street article from about a week ago. How investors are reacting to Gulfport Energy expanding the share repurchase program. Given current market cap, Gulfport is purchasing almost 10% of its outstanding shares in 2025, then doing the exact same thing again in 2026. Simply Wall Street breaks it down that the most recent authorization of a larger buyback plan supports per share metrics and underpins the investment case for near-term shareholder value, but does not address the longer-term production or basin-specific risks. Now, while that is true in general, remember that we just saw that Gulfport's pretty secure over the next 10 to 15 years. Simply Wall Street here might not fully realize that a 10 to 15 year time horizon is pretty decent, and the longer-term risks are really far off in the future. So on the other hand, recent buybacks may limit the company's ability to deleverage or adapt if commodity prices turn sharply lower. Gulfport is expected to reach $600 million plus in earnings by 2028. This would come from 18% annual revenue growth, pulling from the management's discussion in the latest annual report. This was published several months ago. But looking at business and industry outlook, the company's primary focus going into 2025 is the continued attention on reducing cycle times and operating costs to improve margins and support expected free cash flow generation. That's it. Total budget is expected to be in the range of $370 to $395 million. Anything else that comes in as revenue is going to be going back to shareholders unless they see a very specific opportunity to expand their acreage. And you consider that in addition to all this, Gulfport's financial profile is that it has close to $1 billion in liquidity today, debt leverage less than 1, and no maturities at all, not even subordinated debt, until 3 years from now. Gulfport Energy seems like an absolutely screaming buy if you believe that energy is going to be important and natural gas is going to reflect that importance at any point in the coming couple of years. Now remember, you fundamentally are making a bet on the prices of natural gas, but all of this analysis is structured on top of our assumption that we want to make a bet like that in the energy sector. I've taken us to the absolutely best positioned, best run company at a fantastically attractive price within that sector. It wasn't just me alone. A lot of that was thanks to the help of the Sage Seeds artificial intelligence. Keep watching our value validate videos to continue to see insights from that AI. I can reveal that Sage Seeds Capital has purchased a position in Gulfport Energy as of the time that I am recording this video. And we will absolutely be sharing details about that position in our monthly update videos released on the 15th of every month. Please consider checking that series out as well. If you have additional information or context about Gulfport or any energy company that might be popping off thanks to AI infrastructure demand, please use the comments of this video as a discussion board. I would love to talk to each and every one of you about your thoughts. Also consider subscribing or liking this video Every single person who does that small act helps tremendously, helps us keep going and grow the channel. Since we still are a very small channel, if you have any YouTube hype left over, please consider dropping that our way as well. We really, really would like it. I actually don't even know what it's like to have your video hyped. I have not seen it happen yet. Thanks for watching and see you, Sage Seeds.